that we called on this channel continues. We will get you the latest and greatest information. We will also talk housing 2025, thanks to Lance Lambert and Resi Club. I will also talk about the upcoming speakers coming to the school classroom that we have for One Rental at a Time. I think you're going to really enjoy the list. But let's just get into it. Let's get into existing home sales, which came out on Friday, and the numbers were bad. Folks, remember the housing crash that we called on this channel years ago now? We talked about the Fed raising rates. We talked about the transaction crash, not prices. And we, near as I know, were the first to call the transaction crash and the ones that were correct because, of course, we never saw the price crash. So what happened? Well, it looks like existing home sales came in at 4.11 million annualized. Folks, that is the third worst month in the last 30 years. And it was down 0.7% month on month. Inventory is up 6.7%. You and I are talking a lot about inventory. I actually think if you were to break apart inventory, you would see a lot of inventory growth in Texas and, of course, in Florida. I would love to kind of get a breakdown and may even reach out to Lance Lambert and see just how bad Florida and Texas are. Because, again, I think you can really get a distorted picture if you are looking at what's going on in Florida and Texas. But nonetheless, inventory is up. And again, it's up 6.7% month on month. That is significant. More importantly, it is up 18.5% annually. Again, what have we been talking about for the last 60 days? If you're part of One Rental at a Time, I want you to remember that is good news. The housing market is undoubtedly broken, like we have talked about for years. The Fed kept rates too low for too long. Too many people refied into sub 4 and sub 3%. And we are going to have a transaction crash a la 1978 to 1994. And if you don't know what I'm talking about there, go to my website, onerentalatatime.com, download the 54-year spreadsheet, and just be shocked that from 1978 to 1993, we never exceeded transactions from 1978. It wasn't until 1994, so pretty wild to think about. But alas, transactions down. We got it right. What about prices? Folks, prices up. Prices are up 5.8% year on year to a record 419,000. This, of course, is existing home sales data, not new home sales, but existing homes up 419,300 to be precise. So again, we had a housing crash. It was in transactions, not price. Now, I am getting more and more questions from mortgage brokers and real estate agents about, Michael, hey, you got the transaction crash right. When's it going to get better? And unfortunately, if you follow the channel, you know I don't have any good news there. I don't see transactions, exceeding 4.5 million in existing home sales until best case 2026. 2026. And to get over 5 million, it might be 2028, 2029. The housing market is simply put broken. Now, some people have to sell, and they will. But there's going to be a disproportionate amount of people that stay in their home. I hear from all of you all the time, Michael, I got a 2.87, I got a 3.12, I'm not going anywhere. Nor should you. Your 30-year mortgage. Think about this. You borrowed 30-year money below the rate of inflation. Why would you ever let that go? And it is that stance that's going to keep the housing market broken and transactions low for years to come. Lawrence Yun, Chief Economist, National Association of Realtors. Well, folks, he got it wrong again. He's out saying that home sales refuse to recover. I was wrong about a spring recovery. Well, Lawrence, dude, go get the 54-year spreadsheet and understand just how long the housing market can be broken. It's going to be years. I'm sorry. The National Association of Realtors chief economist is simply wrong. He is not looking at history. He is not understanding that turnover is going to fall dramatically. Less and less people are going to sell. The 10-year, which historically has been right around 8 years, it's going to balloon to 10 or 11 years. That means how long do people stay in their home before selling? We're going to see just a ballooning of length of time. It is not getting any better anytime soon, Mr. Lawrence Yun. Interesting stuff about existing home sales I thought we should talk about. Cash sales up to 28%. And first-time buyers up to 31%. So folks, if we just assume that first-time home buyers are not paying cash, I think that's a fair assumption in most cases. I'm sure some of them do, but let's just assume that most don't. If we add 28 and 31 together, we get 59%. So roughly speaking, 60% of the market is cash buyers or first-time home owners. So that leaves 40% for investors and second homes and move-up buyers. The market's broken. The market is simply broken. First-time home buyers historically have been more like 23 or 24%. Again, now at 31%. So pretty exciting. How about good old Mark Zandi, another chief economist? He's out talking about recession dead ahead. Mark Zandi is basically begging the Fed to cut rates. He's almost like Billionaire Barry. You know our good friend Billionaire Barry, the guy who goes on CNBC with PowerPoint? Yeah, that guy. Mark Zandi is saying recession dead ahead. We have GDP down to 1.5% and unemployment rising. He's not wrong. He's not wrong. Growth is certainly slowing, and at least this quarter feels to get even slower, and unemployment is rising. So again, recession dead ahead, according to Mark Zandi. Let's talk about our school community. One Rental at a Time has a growing school community. One of the things I'm excited about doing is bringing you more and more exciting people to speak with and interact with. Just so you know, the people that are coming up, the school community asked for, and we got them. You guys wanted to speak to April Crosley, Lazy Girl REI. She is coming on, I think, Wednesday. Go to your school calendar. You will see it right there. We also have the one and only Henry Washington. Henry Washington from Bigger Pockets fame. He is coming to the school community. You want to talk out-of-state investing? We've got the one and only Millennial Mike putting something together. We also have Lance Lambert confirmed. He's going to do an hour deep dive for you on data. Also, Coach Carson and a gentleman named Jim Ingersoll, somebody who was in my second book, 15 Conversations with Real Estate Millionaires. Those last three, we do not have a date yet, but they all said, Michael, we're game. We're going to do it. So again, folks, we've got 6 amazing speakers coming to the school community where you get to interact, ask questions. And also, we had conversations last week with Dion and the Lumberjack about self-management. Both of those sessions were recorded. Dion's session is available this morning. You can go to the school community under special guest in the classroom section, and you can watch the replay of Dion's conversation. I'm still reaching out to Matt to get the recording of his session, but that should be available today or tomorrow. Again, folks, $20 a month. Get to interact and ask questions of millionaires. You're going to get free education like a 10-week boot camp, 6-hour masterclass on creative financing, and much, much more. Join today. All right, what about next week? We got a lot of stuff coming. Again, it's Fed Speak time, so we got a lot of Fed Speak. I think we've got, what do we got? 3, 5, 7, at least 9 Fed speeches next week, which can all be market moving. Start off hot Monday with 3, and then followed by 2 on Tuesday and more the rest of the week. Monday is 3 Fed speeches. Tuesday, Case Shiller in consumer confidence. Again, remember, folks, Case Shiller is kind of legacy data. It's a couple of months old. I'm going to be looking at consumer confidence because, again, the consumer can break the economy all by themselves. Wednesday, we will get new home sales. What is going on in the new home market? Thursday, weekly claims. This will be the week, folks. Do we validate that we have broken trend? I think 2 weeks ago we were at 242. Last week, 238. Do we stay above 235? Or do we go back to a baseline of 210 to 220? So Thursday will be important. We will also get pending home sales. Again, remember, folks, we've left the spring selling season, so expect those to be weak. And then the big number of the week, PCE, the third and final inflation reading we will get, which is, of course, the Fed's preferred message, specifically PCE core. There was a very interesting tweet from the one and only Jim Cramer. Jim Cramer, yes, from CNBC fame. He came out and said, we need to lower rates to lower home prices, which is an interesting take. But I wanted to ask you, because I think when you look at rates, I think there are actually two answers. When I look at rates and I think about lowering them slowly by a quarter point, by a half point, maybe we take mortgage rates from 7 to call it 6.5. In my opinion, if we go to like 6.5, 6.25, we unleash demand. It's called marginal demand. But we don't really unleash supply. Now, it's funny, that tweet, when I asked my community, which got a lot of views, what do they think? Some folks said, hey, you know what? If we take rates down, let's just pretend for a moment, 200 basis points, and we take mortgage rates from 7 to, say, 4.5, people think that will unleash supply. And I don't know. I do agree, just logically, that if rates went low enough, it would unleash supply, right? The housing market would start to function, the move-up buyer would be back, and we would have more supply. But don't forget, folks, if you unleash the move-up buyer, that is supply and demand. The move-up buyer is 2 transactions. So again, we may get more entry-level supply, which of course would be a wonderful thing. But what about demand on the other side? So I don't know. What do you think? If we lower rates a little, what happens to housing prices? If we lower rates a lot, what happens to home prices? I don't know. Let me know in the comments below. I would love to hear from you. Lastly, folks, let's talk about Housing 2025. Yes, folks, if you're not following Resi Club from Lance Lambert, he is a must follow. Lance is a wealth of information. He is already out collecting thoughts about Housing 2025. We got 1, 2, 3, 4. We got 8 forecasts. 8 forecasts for you. We will go bottoms up. So the lowest forecast for 2025 is Moody's. Moody's is 0.3%. So again, certainly below the rate of inflation. In real terms, that would be a crash, nominally up 0.3. So again, this is all nominal, not real. Freddie Mac, 0.5, so 0.5%. Certainly, again, below the rate of inflation. In real terms, that would be negative, but nominally up 0.5. All right, we get out of the single decimal point. So now we go to what seems next? Fannie Mae. Fannie Mae is looking at 1.5%. Let's call that the rate of inflation, or hopefully the rate of inflation next year. In real terms, that would be a 0, but likely negative as well. So again, folks, this is median home price, right? Median home price 2025 for the country. Not your state, not your city, not your buy box. This is country-wide information. How about Ivy Zelman? Ivy Zellman's a little more rosy on 2025. She comes in at 2.3%. Morgan Stanley, 3%. Mortgage Bankers Association, 3.3%. The top two go to Wells Fargo and Goldman Sachs. Wells Fargo at 4.3%. And the winner chicken dinner, Goldman Sachs forecast 4.4% for 2025. If you did the math on that, the average for all 8 is 2.5%. So I don't know about you folks, but I will take the average at 2.5%. And then lastly, folks, I have a treat for you. I was asked to speak at Meet Kevin's Millionaire Summit this weekend. I was supposed to speak today at 2 o'clock. He has asked me to go back to 4:30 and take it from a PowerPoint presentation to a fireside chat. It is, of course, his event. So whatever he wants, whatever brings value to his community, I will be there for it. But since I've already created the PowerPoint, I'm going to go ahead and record it right over there on my computer and let you see that presentation. It's basically how to become a great real estate investor. I was trying to get the audience to understand the process to become a real estate investor. So you will see that later today, probably at noon. I will push it out at noon so you get that. And then folks, again, remember, join the school community, free education, networking, questions, and of course, live events just for the school community. April Crosley, Henry Washington, Millennial Mike already scheduled. We got Lance Lambert, Jim Ingersoll, and Coach Carson coming. Hope to see you inside school. Later.